We are living in a new era, the deepest technological revolution in human history.
Welcome to the session on sustainable impact, scaling digital innovation in Africa. I'm very happy to have you here. I hope you all had a really good lunch. And we're going to kick off with this session on sustainable impact. I would first like to thank the sign language interpretation today, made possible by Vodacom and Assist All. That is through one of the GSMA Innovation Fund alumni called Signs Media from Kenya. Is Luke in the house today, Professor Luke? He should be here shortly. But that is one of the grantees that we've supported through the GSMA Innovation Fund that I can share a bit more about. So my name is Simone Hinrichsen. I've been working with the GSMA Innovation Fund for a year now. And what we do at the GSMA Innovation Fund, we support innovative startups in Africa and Southeast Asia who are addressing socioeconomic issues through the use of mobile technology. And we support those entrepreneurs on their journeys to scale. We've supported over 130 grantees, and that includes startups and other types of organizations. We've supported over 130 of those since 2015. And earlier this year, we released a report, we did some research. I know it's a very bright screen right now, but yes, so we supported these startups. We did a report looking at the scaling journeys of 21 of those alumni, and we identified 3 different pathways to scale among those grantees. So the first one, expanding the offering to more users in the same context. That's one way that we identified as a pathway to scale. Secondly, adding more functions in a way to increase value to your existing customers. And thirdly, replicating the solution to new markets. And one of our alumni will share more on that in the first panel session we have for the day. But for now, I'd like to welcome Luisa Odell, Innovation Advisor from the UK Foreign, Commonwealth and Development Office, FCDO. Please, a round of applause.
Thank you, Simone, for the introduction and for inviting me to be part of this event. And good afternoon, everyone. I'm really delighted to open the session on scaling digital innovation in Africa, especially because I spent most of my working day figuring out how to do this. In this session, GSMA have brought together a panel of inspiring people who will help you explore the different journeys to scale for 3 innovative startups in Africa and how their journeys can be accelerated by support from different organizations. As Simone mentioned, I work for the FCDO, which is short for UK Foreign, Commonwealth and Development Office. So our mission is to help solve some of the biggest global development challenges by unleashing the power of people and countries to take control of their own futures. And we at the FCDO believe that the private sector, supported by development finance, has a vital role to play in finding solutions at scale to support the Sustainable Development Goals. A core part of our work is to help countries to get the right investment they need to grow secure, open and thriving economies. We take a patient approach to our work, which is rooted in long-term partnerships to support approaches that will help countries, businesses and people achieve a better tomorrow. And a priority for the FCDO is the increase in climate finance to help countries and communities adapt and tackle climate change. The UK government has committed to spend £11.6 billion from 2021 to 2026 on climate finance. And the UK and Rwanda co-chair the new Access to Climate Finance Task Force. And here in Rwanda, we work closely with the government on this, including providing £7 million on funding the IRIME Invest, the facility boosting private sector climate finance flows. More broadly, we recognize that digital solutions are a powerful tool that can have transformative effects in driving climate mitigation, adaptation, and resilience. I saw this firsthand when I lived in Ethiopia for the last 3 years. This is a country which has seen the devastating effects climate change can have on poverty, hunger, and livelihoods, especially for those who are already furthest behind. But also really been inspired by some of the innovative work we fund to tackle these issues. So for instance, through our support to a grantee called Luisa. This is a grantee we fund through our GSMA partnership, and which is harnessing digital tech to build climate resilience for some of the poorest farmers there. So I have the great job at the FCDO to work in our Tech and Innovation Unit, where we support so many of these amazing innovators through their scaling journey. And I know that this last year was a tough one for many of these enterprises seeking investment in Africa and elsewhere, brought on by a series of global challenges. These ranged from an increase in violent conflict to more frequent and more extreme weather events to risk of a global recession. And those macro issues have had real impacts on people's lives. From high levels of inflation to supply chain issues, they have made things very difficult for businesses and households, as well as hampered the growth we need so much to improve people's lives. Despite these challenges, I'm really impressed to see the positive steps so many of our investments in Africa and elsewhere have made. Even through this past really tough year, many of the FCDO-supported enterprises have been able to raise significant amounts of capital, and they've increased the impacts on some of the world's poorest communities. A key effort of FCDO's support to these businesses on their journey to scale is our partnership with the GSMA. This partnership is uniquely positioned at the intersection of the mobile ecosystem on the one side and the development sector on the other side, which allows the GSMA to play a really effective catalytic role in supporting these startups to grow. And as Simone mentioned earlier, we've partnered with the GSMA for over a decade, and in that time we've supported over 130 organizations to test and scale digital business models, which have impacted more than 47 million people around the world. I think this is really impressive. Another great headline is that while GSMA has disbursed £23 million to these startups since 2013, these businesses have gone to raise another £650 million in additional investment. This is a catalytic effect of having crowded in 30 times more finance than we initially have invested. Again, I think this is a really impressive figure. The work with GSMA is an important part of FCDO's broader multi-million pounds portfolio to support high-potential digital technologies and business models. This portfolio is designed to test and scale innovative ideas to help them realize inclusive and socio-economic impacts. So at the FCDO, we are willing to take informed risks. Some of those ideas will fail, but for those innovators with the potential to reach scale, we'll help them to navigate that journey to scale. In this way, we can impact the lives of millions of people in the developing world with further support from the private sector, national governments, other donors, or philanthropy. And FCDO's portfolio covers every stage of the finance cycle, ranging from really early stage to large investments which support businesses to grow in a sustainable manner. And we work really closely with other organizations that invest to help startups bridge between these two. And I think this end-to-end story is really important. The UK's Development Finance Institution, British International Investment, or BII, is our most significant investment vehicle at the later stage of the finance cycle. And despite the macroeconomic headwinds I mentioned earlier, BII has made more than £1.2 billion of new impact-led investments in Africa and Asia in the last year only, and with over half of that money committed into climate finance. I'm optimistic about what comes next, despite these challenges. While the challenges are significant, I'm convinced that digital innovation offers enormous potential to reach population in need, and to do that at scale. So I just want to close by really giving a massive thank you to thank you for the dedication, passion, and commitment of the people we have worked with or supported through our partnership with the GSMA and others. It's through exchanges like these that we can learn from each other as we each play our part on their journeys to scale. In that sense, I'm looking forward to hearing from the 3 Mobile for Development grantees, Crop to Crash, Insibuku, and Hello Tractor, about their scaling journeys. Thank you very much.
Thank you, Luisa. And yes, we have a massive thank you to FCDO for your continued support with that we can continue to support these impactful startups that I would really like to welcome to the stage now. Firstly, I would like to welcome Gerald Otim from Insibuku. That's a fintech from Insibuku. Elizabeth Okuneye, Head of Customer Success from Hello Tractor in Nigeria. And Michael Ogundare, the CEO of Crop to Cash in Nigeria. All right, everyone, get your mics ready, switched on. Right, our first question is going to go to Otim at the end from Insibuku in Uganda. Can you tell us more about Insibuku and the different stages of your scaling journey? As I showed in the beginning there, I mentioned that there were 3 different types of scaling that we identified, and why don't you tell us about your scaling journey?
Thank you very much. Insibuku is a Ugandan-founded fintech. We are on a mission to transform community banking schemes, such as savings groups and credit unions, into digital banks for last-mile customers. We do that by automating everything they do with data and money. First, our primary focus was to make sure that we can test the solution in Uganda and gain the level of traction and success in Uganda so that we could replicate and repeat the same success in new markets. And we did so by aligning with strategic partners, especially those in the mobile financial services sector, such as MTN, Airtel, and Stanbic Bank. And through those alliances, we have been able to test new, innovative financial products, such as mobile loans, mobile savings, and mobile payments, integrating those capabilities to our core banking system, and allowing now 380,000 customers in Uganda the opportunity to interact with financial services and banking different from how they did it before. And 3 weeks ago, we announced our expansion into Malawi. And I would like to announce here that not only are we launching in Malawi, we are doing so with an initial 50,000 customers signed up to use our solution in Malawi already. And similar to what we have done in Uganda, all this is made possible through the strategic alliances and collaborations and partnerships that we establish. And we hope we can do the same in several other markets where customers like this exist. Thank you.
That's great. I mean, watch this space. So you're just going from strength to strength. It's great. We've been part of your scaling journey twice, along the themes of financial inclusion and digital inclusion. So it's really great to see how much you're growing. On top of the financial support that you've received, especially in the early years, what kind of support has proved to be helpful other than financial support? Any technical assistance? What could you say along those lines?
Yeah, I think to start off, it's very easy to downplay the impact that forums and platforms like this provide to startups. And we have been a great beneficiary of these kinds of platforms. We've had the opportunity to be on panels like this at MWC events and several others. And partners like GSMA have been, of great support, providing us the opportunity to attract the kind of visibility we need. Events like this also provide a lot of credibility and makes it easy for us to fundraise and to attract the kind of alliances that we need to grow the business. But also, secondly, it's technology partnerships. And like I've mentioned just a moment ago, we have very strong technology partnerships in Uganda with MTN and Airtel. And these two telecom companies have provided us access to both the infrastructure that we need to build new products and to innovate further, but also the technology resources that we need to co-design products. And we have even worked with them to think about pricing models and business models, leveraging their experience in distributing for and building for mass markets. And thirdly, co-marketing. So last year, Airtel Uganda invested a huge amount of resources to run an online campaign to promote our solution. And this online campaign was massive, actually, in Uganda, and attracted a lot of both partners and customers for us. And in just 3 months, the campaign had a total viewership of 5 million on YouTube. 1.7 million of those were on our video. If you're on YouTube and you type Airtel Uganda and Nsibuko, you will see that video, 1.7 million views. We could not have been able to attract that level of viewership if we had done the campaign on ourselves. And I think this, is simply a statement of both the confidence that partners like that have on our solution, but also the impact of co-marketing and promotion on, tech innovations such as ours.
That's fantastic. And that's something as part of the Innovation Fund that we do advocate for, is to try and open those doors between startups and mobile operators to build synergies along those lines, as you've just given like really excellent examples of how it's helped you to scale. So that's fantastic. Thanks, Otim. I will now move on to Elizabeth Okuneye from Hello Tractor. And in terms of like Hello Tractor's scaling journey, tell us about how you've replicated in different countries, and in that, you're head of customer success. How important is it to really understand the customer in trying to grow your solution?
Okay, I think for Hello Tractor, Hello Tractor has always been a data-driven organization, a very customer-centric one as well. It's funny because we started as a dealer for smart tractors. We just wanted to sell smart tractors. And we did that for 2 years, right? 2017 was when we sort of like responded to the market and introduced our IoT technology and also introduced our SaaS model. And we sort of like strategized or introduced a strategy in the marketplace as well. And that was what led to our massive growth in 2018. All these introductions that we did in 2017 were just because we listened. Hello Tractor has been able to strike a good balance between being customer focused and being data driven, because it's really hard when you're trying to balance the two. So moving from there, we have been able to sort of like adapt to responding to the immediate needs of our customers. Moving from where we were when we initially started to our pivot year, because we introduced a lot of product offerings, to just even focusing on resilience during the COVID period. 2020 is 1 year that was really hard for startups when you think about it. A lot of companies folded, but we were very focused on just keeping the customers that we had. And when you try to keep customers, you have to listen. But when you are also listening, you also have to look at what the market is like, right? For 2020, for a business that was reliant on in-person relationships, 2020 was really tough, because then we had to like re-strategize to even fit with the restrictions that was placed on in-person interactions in 2020. Coming from there, we really came out strong. because we just found a way. Our customer support team fully launched in 2020, so that was really great for us because we had to start introducing things that really helped. Moving to 2021, where we now have 1.7 million, over 1 million acres under our management, over 1,500 fleet owners. It was really huge for us. All this success, I would say that we attribute to just being able to listen, collect feedback, and use the wealth of data that we really get, because Hello Tractor sort of like sits on a wealth of data, and using that data and infusing that into decision making has really, really helped us as an organization in terms of expansion, introducing new products, and just scaling in general.
Yeah, brilliant. And I'll pose a similar question to you. Otem mentioned that partnerships have been very key to scaling. Have there been any partnerships or other type of non-financial support that has helped Hello Tractor to scale?
Absolutely. Hello Tractor has been one company that has been open to productive partnerships. I would say that one key one that stood out for us would be the one with WFP. Most of our booking agents right now, booking agents are like middlemen that sort of like manage the relationship between fleet owners and farmers. And most of them, a good percentage of them, are from the farmer service centers in WFB. And, they gave us this manpower, this wealth of manpower. And we've been able to, just help them with strengthening their manpower as well, because some of these booking agents are now tractor owners, now own their own tractors. And that's under our pay-as-you-go finance scheme. And it's really easy for them to, pay back and work towards fully owning the tractor. It's like a lease-to-own platform. That's one that I would say that has really been significant for us. There was a time that we also partnered with a company that just focuses on content. They have a digital content library, and we got content from them because we wanted to train our farmers to be more climate smart and climate aware. And in sort of like in response to that, or what we had to do, was just to give them the insights that we got from using their data, and it was really good. It was a beneficial partnership for the two parties. So yes, I think that we've had some strong partnerships that were not really financially focused.
Great. So partnerships really being the key to scaling there. Thanks, Elizabeth. And now moving from one fintech started in Nigeria to another, Michael, tell us about Crop to Cash and your scaling journey as well, how you've grown over the years.
Oh yeah, thank you very much. I hope it's not too chilly in here for everyone. Right, so my name is Michael. I lead the team at Crop to Cash, and at Crop to Cash, we make it easy for smaller farmers to access credit and high quality inputs. We actually started off in 2018, trying to figure out ways to help smaller farmers and raw material processing companies to manage the entire supply chain. So we built out an entire supply chain system that covered everything from end to end, from the weighbridge to warehousing to quality control to accounting to payments, all of that. But one part actually really struck us, and that part that struck us was around the payment side. We realized that we built all of this technology, and they weren't paying any farmers with it. And that just, exposed us to the fact that not a lot of farmers actually even had bank accounts for them to get paid or to even access credit. It was a shocking revelation, and when we decided to tackle this, we needed to figure out a way to build a solution that is as inclusive as possible for smaller farmers in rural communities. And we had to go the USSD approach. That meant working with MNOs and telcos. Nigeria isn't a large mobile money market because we have a very mature banking industry. So that meant creating a mobile money solution that is connected to the typical commercial banking system. So we kind of like had to be like a quasi mobile money operator at that point in time. This started off around 2020 during the COVID period, and shortly we got the first integration done with a commercial bank and the MNO. And when we got that done, 2021 when we launched. The first month when we launched this new product, I think we only had 6 farmers signing up. It was almost discouraging, but we did not despair. By the second month, we had 15 farmers signing up. That's like more than 100% growth, but it's just 6 to 15. But then we went from 15 farmers around August of 2021 to 80,000 farmers by the end of 2021. From 80,000 farmers by the end of 2021 to 200,000 farmers by the middle of 2022, and today we have almost 500,000 farmers that we're working with right now. It's been a roller coaster ride so far, but here we are today working with almost 500,000 farmers and with some interesting partnerships in the pipeline that can get it up to some very significant numbers really soon.
Okay, so you've mentioned partnerships in the pipeline. I won't ask you to speak about those, but could you tell us about one of your mobile operator partnerships?
Oh, yeah, so with the way telco technology is, how complicated it is, we had to work with an aggregator that would connect us to all of the telcos within Nigeria. So that was, pretty much just working with Africa's Talking at first, and that made it possible for us to get connected to MTN, Glo, Airtel, and 9Mobile in Nigeria. So as we speak today, any farmer anywhere with any type of mobile phone can dial our USSD code and open a bank account in less than 2 minutes. It usually shocks the farmers when that happens. Like, I have a bank account in 2 minutes? But yeah, they do that. It works for them, and they then go on to tell other farmers that, okay, now I have a bank account, you should have a bank account too, and all of that. So yeah, these partnerships with, leveraging telco technology has made it very easy for us to, scale in a market with very little connectivity.
Great. And how do you deal with the challenges around climate shocks for your farmers, for your users?
Oh, yeah, so for us at Crop to Cash, we are in a unique position where we get to have access to a lot of data on what farmers are doing based on the fact that, we have digital financial services for them. We know who farmers are, where they are, what they grow, how much they make, and how climate shocks actually affect them. So initially working with the GSMA Innovation Fund, our goal was to figure out ways to make it possible for smaller farmers to access climate smart inputs through a digital marketplace that farmers can access in their local languages on USSD. So we did that, and that worked very well. But then we decided to go one step further because we see that there's beyond just climate smart inputs, there's also a really huge gap with climate smart advisory that smaller farmers should have access to. So along with the support of the GSMA Innovation Fund too, we've been working on something very interesting, working on building an AI model that can pretty much just, take advise smaller farmers in their local languages. So that means a smaller farmer today can pretty much just pick up their mobile phone. It doesn't need to be connected to the internet, and just call a phone number, and on the phone, describe whatever the problems or challenges that they're facing, and our system will be able to respond to these farmers in their local languages with the accurate or, with the right solution to their problems. This is something that does not even exist anywhere within Africa. So we're like literally at the forefront of innovation here in tackling climate shocks with what we're doing.
Oh, that's amazing, being a pioneer in that space. Have there been any challenges with working with AI as an emerging technology?
Oh, well, yeah. I mean, AI is very interesting. So now we're making it possible for our AI to speak in the local languages of these farmers. When we started off, our AI almost sounded like a 2-year-old, pronouncing things and pronouncing the local dialect of these farmers in interesting ways, and it's pretty challenging to try to fix that. But with a lot of work, research work, and some engineering work, we're getting it better. So I would say that our AI is a 13-year-old now, and very soon maybe it's going to be an adult and be able to do a pretty accurate job.
Those teenage years, they can't be easy.
Of course.
But that's really amazing. Thank you for all that input. Now I'd like to open to any questions that we might have from the audience. So if you do want to ask a question, please stand up and tell us quickly about yourself and which person you'd like to direct your question to. And of course, you could ask each other any questions if you have for each other. But let's see if we have any questions from the audience. Yes, is that my friend Luke Maleka? Please, there's a microphone coming your way.
Thank you very much. My name is Luke from Kenya, and this question goes to our team. And just first of all, let me thank you for the job that you're doing, and it's very amazing, and the scaling that you're doing, that is really impressive. I know that one of our product development as founders, we are told agility is one of the ways in which to build a successful organization as you're going forward. In this case, whereby you're working with a plethora of supporters and partners and probably funders, how do you make sure that as a founder, you are not actually straight-jacketed to some of the requirements of the funders, and you remain agile to make sure that you're actually succeeding in whatever you're doing? Thank you.
Interesting question, because I think a lot of startups usually fall into the trap of building products to fulfill the requirements and needs of founders, of funders. I've run into startups that, are really tweaking their pitch decks every time there's a new call for proposal, because they want it to speak towards the call for proposal. And I think that's usually, especially in early stages, there's the temptation to do that because, you need money, you need funding. I think for us as Nsibuko, what's really been useful, and for me as a founder, is developing the discipline to say no, which is very difficult for a lot of startups. But we have said no several times. And I think that the more and more you do that, the more, funders, start to profile you in a certain way, which is actually important for your business. Because then they understand that if they are providing funding, that funding has to be aligned with the interest and priorities of your business. And I think that is fundamentally an important thing for founders to do. I think first you need to know what it is that you want to achieve as a business, or what you want the business to be in the next 5 years, and just making sure that any partnership you get into and any funding that you take is actually helping you build towards that. And we've taken, I think we're probably one of the few startups that have been in 2 of GSMA's accelerator programs. Mm-hmm. So we've taken 2 kinds of funding from GSMA, and all of those monies have been invested in the things that are important for us as a business. And we've said no to so many other funders and accelerator programs that divert us or seem to divert us from what our core strategy is as a business. And I think that's important for every startup.
Well, thanks. Well, thank you, Otem, then, for choosing us to support you there. Any other questions? We've got time for 1 or 2 more questions before we head into the next short panel. Any burning questions for the startups? If not, we've got one right at the back there. Thanks, Martin.
Thanks, Simone. A question to Gerald. Typically, Malawi, Uganda, they're not the same types of market, yeah? But you've been able to scale into Malawi. First, how did you select or spot on, how did you settle on Malawi? And what would you advise startups who want to expand into other markets and that are not typically the same as theirs? And what are the challenges you faced in the course of replicating in Malawi?
Yeah. Thank you very much. That's a very good question, and a question I've run into several times in the last couple of weeks. So Malawi and Uganda are similar and different. Culturally, quite similar. They almost speak the same language. I think they are mostly Bantu people. There's a lot of cultural similarities between Malawi and Uganda, and that's important for us as a startup when we're scaling there, that there's some kind of cultural alignment. But they are also very different economically. Purchasing power, the economic setup of Malawi is not as advanced as Uganda. And also when it comes to technology, Uganda is generally more advanced technologically than Malawi is. I think Malawi is where Uganda used to be when we first started in Sibuko. And I think the fact that we have grown in Uganda and have been able to navigate the challenges of building and sustaining a tech platform throughout the different stages of technological transformation in a country, we are sure we can navigate that in Malawi as well. But I think the reason we actually moved to Malawi is mainly because in terms of market segment, Uganda and Malawi are quite similar. There's a huge number of SACCOs and savings groups in Malawi as it is in Uganda. But also the markets that surround Malawi, like Zambia, Zimbabwe, there's a lot of similarities. So it's very easy for us to then scale into most of those markets and build some kind of dominance. But also, there's a very limited number of fintechs in Malawi, which gives us a really good opportunity to dominate the market. We believe 2-3 years, we can very easily dominate the market in Malawi, become the market leader, and replicate the same success in the markets that surround it. And that's really why we decided to make the move to Malawi. We could have chosen any other market, but there was a particular reason doing that. Of course, moving to a new market, there's a lot of challenges. What we did actually to get there was we got into a strategic partnership with a firm whose entire business is in market scoping, studying the market landscape, identifying strategic collaborations and partners and customers. We got into this partnership and they helped us secure our first customer, a large financial cooperative with 50,000 customers and as an anchor customer. And that was important. We needed to go into Malawi with a customer already and with some money. And this customer not only provides users for the platform, but also provides substantial revenue that can literally sustain all our operations in Malawi for the next 2 years. And that was important in making that decision.
That's fantastic. And Elizabeth, I'll pose a question to you. Your presence, Hello Tractor's presence, is not just in Nigeria. Can you tell us more about the different countries and regions that you have presence in?
Okay, interesting question. So we started out in Nigeria, and when we started, we had about 30 tractors under our management. It was in 2018, which was a really defining year for us, that we were able to move to Kenya. When it comes to selecting locations for Hello Tractor, it's not just about where business is good, right? We have one goal, and the goal is to bridge the mechanization gap. And that's something that we prioritize over everything, you know. Moving to Kenya was because there's a huge potential in Kenya. In Africa, actually. And now we're present in about 15 African countries, right? But the expansion really started in 2018, and that was after we had introduced our IoT technology that helps fleet owners manage their tractors. We introduced technology that helps farmers get tractor service on demand easily. It's like a ride-hailing service. It was that year that we became the Uber for tractors. That was when our scaling journey really started. That was when we started moving from expanding. We also infuse artificial intelligence into the selection of the countries that we move into. And it's based on potential, really, and how big is farmer demand for tractor service there, and how do we come in? How can we help? Is this somewhere that is this a country that is open or that is very agriculturally focused? So We have, or we have been able to move to about 15 African countries now, and also 3 countries in Asia. So that's really good for us. Again, our focus is just bridging the mechanization gap. So we keep moving. Present in about 17, 18 countries now. And who knows, in the next 3 months, we have a bigger number.
That's incredible to hear. That's really a great presence.
So, I mean, I think that is definitely something to think about when you're thinking about your, scaling journey. There are different ways to look at how you want to scale. You can scale horizontally or vertically. You can scale across multiple markets, or you can scale across multiple products within the same market. In our case, 2 countries, 18 countries. We're just in Nigeria, and but for us, it's such a huge market. We have more farmers in Nigeria than the entire population of Canada. Like, imagine that. Give a cutlass or a hoe or seeds to every single person in Canada today, we would have more farmers in Nigeria than all of them. So in our case, we've pretty much just scratched 1% of the potential that is possible within the market that we're in right now. And yeah, it just shows that, there's a whole lot more that is possible there. It also just tells us that, there's still a lot of potential too outside of that. And it means that, when you can nail down pretty much just the entire process of how you can create value within one market, then you can take that to any other market really easily, just like you mentioned with Malawi, to Zambia, Zimbabwe, and any other market. So yeah, as entrepreneurs or innovators, that's definitely something to think about.
It's no small feat to say just in Nigeria. You don't need to say just in Nigeria. But anyway, if there are no other questions, I think, there's one question at the back there.
Yeah, thank you. Yeah, quick one. So do you see, Michael, it's for Michael, do you see a role for AI in your plans for scaling up in future?
Thank you. I love that question. Why? Because what we're working on right now with respect to AI, just like I said, makes it possible for farmers, any farmer, to get the right sort of advisory in real time on their mobile phone via phone call. They don't need to have a smartphone. And because we can make this work in their local languages, we already got this working for Yoruba and Hausa in Nigeria. Some of my lovely friends at the GSMA Innovation Fund got to already test this in Swahili, which means that we could literally, replicate and take this same technology to any other market where we can get the technology to work in their local language. So yeah, AI is definitely one very important key to scaling for not just us, but for a lot of technology companies going forward.
Brilliant, thank you. Well then, I hope you can join me in thanking our speakers. Before we lead to the next panel, let's give them a round of applause. Yes, you can go. Good, so don't run away. We're going to head into our next panel with the different investors that we have worked with. I would like to welcome to the stage Eva Waweru, Senior Associate for Communications from Village Capital, as well as Serge Priam Sanzineza from the Rwanda Innovation Fund, which is part of the Rwandan Development Board, and Nicholas Simola, Investment Management from FinFund. Great, thank you. So Eva, we'll start with you from Village Capital. Can you tell us more about Village Capital and how you prepare startups for further investment?
Thank you. Well, Village Capital is an entrepreneur support organization that runs accelerator programs. We scale entrepreneurs in various ways. One is through our accelerator programs, which also provide equity-free grant funding. And I think our greatest strength with our accelerators is that we prepare entrepreneurs to become investor ready. So we have various tools. One of the key ones being venture investment readiness. It's called the viral pathway that enables entrepreneurs to self-reflect and understand where they stand in terms of what would an investor be looking for, and this is where I am, these are the milestones I need to achieve in order to become investor ready. So that's one of them. We also have a peer selection methodology that takes the power away from the investors and enables the entrepreneurs to decide who is most investor ready and gets the investment.
That's great. We've used the viral pathway tool within the GSMA as well in the Ecosystem Accelerator program. So that's really amazing. And my second question to you then is, you talk about developing smarter systems. What exactly does that mean?
Developing smarter systems means first looking at what are the challenges that entrepreneurs face and developing tools that can disrupt the system. So in addition to viral and peer selection, we also develop tools. We do a lot of research and release a lot of reports, insight reports that look into the state of the ecosystem. I mean, we already know things like there's a huge gender gap in terms of investing. So what next after releasing reports that talk about the gender gap? We release tools that are able to address some of these discrepancies. So we recently released a tool called Smarter Systems that gives investors and entrepreneur support organizations various steps that they need to take to decrease the discrepancies within investing. And one of the things that we found is that there are very many reasons why there's this discrepancy. In many cases, women-led entrepreneurs are asked, women-led ventures are asked different questions from male-led. Women-led ventures are asked more risk-related questions. Male-led ventures are asked more growth-related questions. So there is a form of bias that comes into play, and having a consistent set of evaluation framework is really important. So that's one of the tools that we have released. Another one that was just released a few weeks ago is the Capital Explorer. And this is a really important tool, not just for investors, but also for entrepreneurs. Entrepreneurs, as my brother from Uganda mentioned, are sometimes falling into the trap of developing ventures that are addressing the needs of the funder at this point and no longer the needs of the people they intend to serve. So what Capital Explorer does is it enables entrepreneurs to look at their startups, of course, using the viral framework, but then also identifying other capital structures that work for them. So capital doesn't have to come in form of equity or debt. There are other things. There's grant funding, there's crowdfunding. There are various things that work for entrepreneurs that are not necessarily going to take away, one, the core of their operations or their vision. So we do develop a lot of tools and we develop a lot of research to support the ecosystem.
Yes, I'm really interested in this gender discrepancy research. As the head of Mobile for Development, Max Cuvillier-Giacomelli, has shared recently that female CEOs in Africa have raised 19% of total equity funding recently, which is their highest one since Q1 in 2021. So that's good news. We're moving in the right direction, but it's tools like that that will really help us keep going in that direction. So
It's actually 7% in 2023.
In 2020, oh, for the whole year?
Yeah.
Okay. Well, that's really important to know so that we can keep on moving in the right direction. So I think then we'll move on to Serge. Could you tell us more about your ecosystem building team and how you're helping to grow the local ecosystem here in Rwanda?
Yeah, thank you so much. So the Rwanda Innovation Fund has an ecosystem building team, and basically what we're trying to do is that the fund, if I can tell you a little bit about it, it's a government-backed VC fund, and this started making investments in late 2021. And as the fund was, going to the market and trying to understand different deals that could be made, also we got to understand that there was a need that we actually tailored some of the deal work and kind of like management and such things to the context of Rwanda. And what ended up happening is that the government committed to having an ecosystem building team whose job was making sure that the different actors and players within the ecosystem are working in tandem to make sure that these deals can flow. The ecosystem building part of the Rwanda Innovation Fund some of the things that we've had to do was that, we have to work with entrepreneurs, get to understand what are the challenges they're facing, raising capital, what stage they're at, and make sure that, by the end of the day, we're not just waiting and saying, okay, we never got any deals in the end, but we're actually kind of like finding entrepreneurs where they are and tailoring the different kind of like funding that are there, and of course making sure that the support that they're receiving from the ecosystem is really tailored to the different challenges that they're facing. Beyond that, the fund has also had to, make some really strategic partnerships in terms of creating new projects. Notably, we realized that there was, very little attention to things like sexual and reproductive health. So we're launching a project in that specific, subsector, and on top of that, we noticed that our entrepreneurs and different other players in the ecosystem were not participating as much in the different events and programming that was happening in the ecosystem. So basically, the team was responsible for making sure that we can create different ways that entrepreneurs can get to, exhibit some more at different events and also get to benefit more from the different programs that we had. The final thing that I could mention in terms of the work that we have had to do as an ecosystem building team is the fact that, beyond the capital that could be deployed to some of these ventures, the team was also focused on making sure that these ventures can also be able to, kind of like make first steps towards market linkages as well. So we've had to create a corporate innovation program, and that was more or less to do with the fact that we're thinking, okay, so different corporates are now open to working with startups, and then, okay, startups also did not necessarily understand how they could be navigating that space as well, and we're thinking of different ways that we can be facilitating those transactions and investing in partnerships that can help entrepreneurs succeed, and hopefully some of that success can get translated into deals that will be benefiting the fund overall. So the ecosystem building team is responsible for, one, making sure that the funding that is available through the government of Rwanda can benefit the ecosystem in Rwanda as well. And number two, making sure that we can build strategic partnerships that can be enabling different players in the ecosystem to grow and benefit everybody who's working in Rwanda.
That's great. And can you give us an example of a type of strategic partnership that can help startups to grow, ones that you've helped to broker?
So some of the things that we've had to do was that, we partnered with the ICT Chamber, which is the umbrella organization for all ICT companies in Rwanda. And then again, the ICT Chamber is kind of groups most of the companies that are operating within that space. And then through them, we got to have an investor in residence program whereby this investor comes in and literally helps the companies understand how are you going to be selling to the different corporates, and of course helping them structure those deals so that in the end, whenever they walk into these corporates, they actually understand what they're trying to do. Beyond like that partnership as well, what we've had to do as well, again, because most of the entrepreneurs, as much as they had products that were, kind of like appealing, but they had never had that experience of like actually making sure that those deals were getting over the line. So basically helping them with things such as legal, accounting, and different other matters that were very important. And the IC Chamber was more or less kind of like helping us understand from the get-go and from, kind of like a bird's eye view of what the entrepreneurs were facing, since they were kind of like in a coalition of most of these ventures.
Mm-hmm. Great. And you've mentioned to me that you were an entrepreneur yourself in the past. So how does that help you in supporting the founders that you work with? What are their specific challenges, and how do you support them?
Yeah, so I think it does really help because, again, a couple of years back when I was getting out of college, I was very interested in, launching a venture myself. And I think I just came in, with this concept. We had a team, and we're just thinking that, we are ticking all the boxes, so we should be very able to succeed in this market. But then when we came in, then we realized that we did not understand the context of Rwanda, because most of us were based in the US and other countries, so we had never been in Rwanda and had never really understood that context. So basically, making sure that most of the research and work that is being done is coming from the bottom up is one of the things that we've had to do for the different programs that we're designing. On top of that as well, again, having been there, was understanding that the journey for entrepreneurs is that of growth. and some of the first ventures they try might not necessarily succeed, and being able to say that we want entrepreneurs to be learning by doing, by trying different ventures. Some of them might work, others might not, but at least they will remain in the skill set that we need for them to be successful in their follow-on venture. So that perspective, coming, having tried and seen how difficult it is, allows me to keep some perspective in terms of how we understand the learning and building skill set in the ecosystem.
Thanks for that, Serge. And now moving then from Rwanda to Finland, Niklas, could you tell us more about FinFund and what specific sectors you might focus on and what stages you're interested in?
Right. So, good afternoon, everyone. So yeah, the FinFund's the Finnish DFI, similar to the likes of ISC, BII, Proparco, and others. In terms of sectors, traditionally we had 4 key sectors we looked at, being renewable energy, where the focus had been on climate change and also providing more affordable and reliable energy. Agriculture, on themes around food security, also bringing better farming inputs and better farming methods. Forestry, where it's being focused on climate sequestration, and financial institutions, more traditional ones, meaning commercial banks and microfinance, where the themes are mostly on financial inclusion. And lastly, roughly 2 years ago, in our strategy vision, we launched a new sector, for the 5th key sector at FinFund, where I sit in, and that's the Digital Infrastructure and Solutions team, where we look at the whole digital value chain, meaning on the infrastructure side, we look at data centers, submarine cables, fibers, and whatnot. And on the solution side, we look at what that data and infra enables, meaning fintechs, insurtech, e-commerce, and so forth. In terms of what stage we look at, on the tech side, we're more, say, of a growth stage investor, meaning around Series B and above.
Great. And what does FinFund offer, like on top of the funding? How do you support your founders?
Right. So as any investor is expected to do is, of course, extend on our investor network and additional fundraising, and also try to find synergies within our portfolio companies through the whole sectors we have, making connections to local banks or providing energy solution providers to their businesses. And on top of this, we have a partnership with 6 Decibels, where we do impact surveys for the companies in our portfolio, meaning to get to better understanding of who that end customer is, understanding how that product or service improve the customer's lives, and how satisfied are they with that product. And yeah, it's been an interesting journey to see those reports, as it's been a continuous discussion in any panel that's the importance of knowing what that end customer is and how valuable it is to understand those aspects. And in addition to that, we also have a partnership with Work Ahead that does surveys for the companies in terms of job satisfaction and decency surveys, where you get a better understanding of the satisfaction of the employees, but also their performance. And yeah, lastly, something new for us that we're truly excited about is now we're going to be receiving technical assistance, then to go that extra mile in providing our portfolio companies with product development, assisting on environmental, social, and deliberate impact matters, or even assisting on staff trainings for the employees.
Yeah, so that covers a lot, lots of
exactly.
types of assistance. And I mean, that's what Elizabeth from Hello Tractor said, that understanding that end customer was so key to scaling their solution. So those surveys must be really impactful then for your cohorts. And then if we think about due diligence, what do you look for in an investee that demonstrates that they have the potential to scale?
Yeah, as we are a growth stage investor, I mean,
they are scaling already.
Yeah, they should be very scalable, but meaning like what we look at is understanding that the company is in a large enough total addressable market for able to scale organically. Having understanding the regulatory environment, especially with fintechs and insurtechs. Each market in Africa is different, so having that correct license in place or having that sandbox framework in that market to be able to apply those licenses. But in terms of scalability, it's comes to the founders, the management, and the support staff having the right team to complement each other and able to support that growth. Also, when expanding to markets, partnerships are important, as if you're a Nigerian company going to East Africa, it's a completely different market in terms of culture, in terms of regulatory environment. consumer behavior in terms of payment method and so forth. There we see an importance of the partnerships, and as well as on showing that the productivity and efficiency of your model, of able to grow top line while maintaining costs. And that comes down also to having that customer retention, and comes down to the end of knowing your end customer well.
Yeah, so you invested in KaiOS in 2022. Yes, so could you share more with the audience what attracted you to that investment?
Certainly. So yeah, in short, KaiOS is an operating system for smart feature phones, so different from Android and iOS. And there we found interesting, as what's been also discussion for the whole conference, is the usage gap, where device affordability is a huge bottleneck for accessing the internet and being meaningful internet users. And for KaiOS, able to have a smart feature phone, looking like a normal feature phone, but having that smartphone functionalities, having also WhatsApp and Facebook that are important apps to have in the continent, and able to provide affordable pricing of around $20. When you compare it to a cheaper Android, it's around $40 to $50. So it brings a huge amount of optimism to that problem that we're trying to solve. And on top of this, we're also happy that there are also new product development coming in terms of digitizing merchants, gig rides, and transportation in forms of able to do payment acceptance through the phone, and also providing bookkeeping apps into the phone.
Great. Well, before we open to questions from the audience, so I hope some of you've got some questions ready, I'd like to ask one more question to Eva. So how can investors, so because you're dealing with both sides of, of startups and investors, how can investors tweak their due diligence process to unlock those overlooked opportunities that you mentioned in your reports?
Well, it would be great if they first downloaded the report. But in addition to that, we have developed a framework of questions that they can use to gauge their entrepreneurs. I think the most important thing, as I mentioned earlier, is consistency and making sure that you are very clear on what a potential investee looks like, and not tweaking the responses or tweaking the questions based on the startup, either where they are from or whether they're male or female-led. So we do have a framework that we're happy to share. I think it's actually free and obviously very free and easily downloadable on our website, which is vocap.com. It's just a framework of 3 very different questions that you can ask, but they help you identify the right people without tweaking the questions.
That's really interesting, thanks. So let's open up now to any questions from the audience. If there are startups here that want to ask, we've got one at the back there, if we can get a microphone. We've got 2 at the back now. Thank you. So just please introduce yourself and who you would like to ask the question to.
Thank you. My name is Koliwe Majama. I'm with Mozilla Foundation, and my question is for Serge. And I think this question is really based on just the interest of just the Rwanda Development Board having an innovation department or section. And I think that in general, the approach has been that ordinarily it would be a Ministry of ICT that is handling issues around innovation. So my question is quite broad for you, because I just wanted to find out whether you think that it's important for national ICT policies to be able to ensure that other public bodies or institutions that are dealing with the private sector or growing, just like the economy, are included in ICT policies, and what really is it that facilitates such easy interaction in Rwanda?
Thank you so much. So, in terms of the Rwanda Innovation Fund and how it was structured, as of now, yes, it sits at the Rwanda Development Board. And but in terms of the day-to-day work, we work very closely with the Ministry of ICT and Innovation. And I think the role the Rwanda Development Board plays in Rwanda is this is more like the engine for public and private sector-led growth. And basically, the Rwanda Development Board is behind all that, making sure that investors are very interested in Rwanda, and on top of that, really developing brand Rwanda so that everybody can get to know what we can offer. Something else that I can mention as well is that as Rwanda, the main selling point has been that we want to make sure that Rwanda can be a good home for companies that are interested in setting up the operations in Rwanda. And that's literally what the Rwanda Development Board does. And so we understand that Rwanda is a very important strategic market, but beyond that, what Rwanda might not offer in terms of the size of the market that we have here, we do offer in other things, such as, in terms of Rwanda has the ease of doing business and different other things that really make it easy for anybody to, one, set up operations and or run their companies in Rwanda, or maybe even domicile some of these things. So the Innovation Fund sitting at RDB does help in one way to, kind of like play that kind of like private sector kind of like smooth operations of, making sure that we're creating like the momentum for the private sector to be interested and involved in most of these things. And number two, also remaining with the flexibility that we're able to work day to day with the ministry in terms of different other things, policy making, implementation, and, on a day-to-day basis, we're literally working together on the implementation design of different other programs. So it's more of kind of like a double fold, you're trying to get the best of both avenues and making sure that Rwanda is a very attractive location for doing business, but number two, also making sure that operationally we are maintaining the whole infrastructure of setting up policies and different other instruments that are key to having a thriving innovation ecosystem.
Great, thanks, Serge. And we had a question in the corner there.
Hi there, my name's Julio Romo. I'm with the UK's Department for Business and Trade. We're here on our second year, supporting MWC Kigali. Thanks very much for all the insight that you shared. The question I have, I think one of them says you kind of just answered about, do they have to be domiciled or started up here? So great to know what that insight is. More with regards to opportunities from across Africa, are there any specific sectors? Do you focus on helping to grow startups that focus on MSMEs or SMEs that are kind of mobile first or transformation? What are your priorities at the moment with regards to new startup opportunities? Thank you.
So in terms of the focus of the fund, so our scope has to do with tech-enabled startups. So that could be, we're not very kind of like sector dependent. So we've made investments in health tech, we've made investments in education technology, agricultural technology, and different other cross-cutting sectors as well. But I think one of the core beliefs of the fund in itself and its philosophy in terms of investing, we do believe that tech is the driver of scaling and growth for any of the ventures that we do invest in. So it has to be a very significant component on how they're going to be scaled, and we have to see a very clear image on how it fits in and how it's going to be allowing scale as they go. And something else that I can add as well has been that in terms of the ventures that we tend to focus on, of course, the Innovation Fund is a VC fund, so which means that in terms of investments in MSMEs and the rest, we've had to kind of like be more or less in terms of the tech components of it. We have a couple companies that are doing things in insurance, a couple companies in health and the rest, and our focus has really been making sure that whichever companies that we're in, whether they're in Rwanda, whether they're coming into Rwanda, they're able to scale across multiple markets, and we believe that tech is behind that, and be it mobile, be it whatever else it might be, as long as there is a huge belief that we think tech is going to be supporting these startups as disrupt to the whatever markets that they're operating in. So I'm not sure if that kind of like does cover the scope of your question as well. Thank you.
Yes, I think it does. Thanks. We had another question at the back.
Hi, my name is Akwo from the GSMA. I have a question about how you look at different kinds of businesses, particularly through the lens of asset light and asset heavy businesses. So my work focuses a lot on energy and water. Obviously huge capital requirements, and within the digital space you also have the asset-light businesses, as a service, software. So I was wondering if you could say anything about how you look at those different types of companies across the different stages. Thanks.
Who's your question to?
The whole panel.
The whole panel.
Yeah, I can start. Yeah, certainly. So maybe, for example, in our portfolio, a company called Trade Depot, it's an e-commerce company in Nigeria. In that e-commerce space, you have asset-light models and asset-heavy models. And there, it's a bit case by case on which sector you look at. But for example, in this case, looking at Trade Depot, as they're also an asset-heavy type of model, is seeing that once you go into markets or cities outside of those largely populated areas, you tend to need to have that own infrastructure in place in terms of logistics, warehousing, and so forth, to be able to provide that reliability of your products and the service to the customers at the high level that you are expected to be. When you compare it into Lagos, we have a large network of third-party distributors. It's much more easier to be in that asset-light model. So it's a really, yeah, once you go into more, let's say, rural or more larger, smaller cities, it's really important to understand which aspect to go to, and is it necessary then going to the bit more of that asset-heavy model.
Mm-hmm. Thanks. So, Serge?
So, as far as the Rwanda Innovation Fund is concerned as well, I think it's not a case of either or. And but if you look at our portfolio, really, you will probably going to be noticing that most of the companies that have been funded by the VC that is running operations for us have been asset light, and I think some of them, for the few that have been more kind of like asset heavy, it's been that we did believe that they were creating an ecosystem that they could own and then be able to kind of like bundle on value added services that could be provided, and then hopefully as they grow and scale, they're able to kind of like reduce their reliance on the asset heavy component of their businesses. But again, it doesn't mean that that's what historically it's been. It's not that there is an inherent preference for the asset light kind of like companies that we've been able to invest in, but it's just that those are the ones that for the markets that we've been in Nigeria, Kenya, and Rwanda, we've been able to kind of like focus more on those ones that were more asset light. And but there is one or two investments that we've made that have been on the asset heavy side, but of course with a path to scalability that tended to be less and less reliant on that as they went about their growth.
Thanks. And Eva, over to you, the Village Capital perspective on asset heavy or asset light startups.
So it's a good balance of both. One of the most important things for us is scalability and impact. So it could be either or. A lot of the startups that we've worked with are asset light. They are edtech startups, mental health startups. So we are not very specific in terms of that.
Great. Thank you. Any other questions from the audience? I think that's it for now. Well, then I would really like to thank the panel of investors, Eva, Serge, and Niklas. It was fantastic hearing from you. Great variety of perspectives along a startup's scaling journey. And I'd just like to thank all of our other speakers as well. If you can give them a round of applause. And yeah, thank you. I would also like to thank the FCDO, especially as well, our donor, and finally as well, again, the interpreter from Science Media through Assistall. Thank you, everyone. Off to your next one.